Hello, I'm Doug McKenzie and this is the Fintech Show. Now, with so much going on in the industry at the moment, we've brought you a medley of topics in this week's episode. We're speaking to people from DBS, Bank of America and BNY Mellon. We also sat down with several key players from financial transaction management company SmartStream. First up, BNY Mellon and DBS look at the importance of digitization and big data.
Fundamentally, becoming a digital bank, digitizing this very bank, improves the lives of our employees. Traditionally, the bank's employees need to think about the customer, they need to worry about the systems, they need to worry about the data, they need to worry about daily operations. Imagine the process is seamless. Imagine data is there. It really unlocks the power of human intellect to really service the client, to service the client in a way that they need, and to bring the insights for them. So for an average employee, this frees them up of the mundane things and allows them to focus on the value-adding things.
What have been some of the core changes that have happened recently because of data?
So for us, the real turning point for our realization of the power of data was probably 6, 7, even 8 years ago when we had this joint venture with A-Star, which here in Singapore is the Singapore government's research and development arm, and we were working with some of their data scientists, and they taught us how to use data in a different way. So forever banks have been using data for marketing and credit, but they taught us to do things like use predictive analytics to predict which one of our branches was going to have the next operational error, or even which one of our relationship managers was about to resign so we could intervene. And so we kind of were woken up to this realization that the data we already had immense intrinsic power which we hadn't actually unlocked. And so we had a slow start, and we figured it was actually quite hard to get that data, access to our own data because of our policies. And gradually we've increased the velocity and the number of these data analytics projects that we've done, and increasingly we're seeing more and more value emerge. And then what's happened is that we've kind of supplemented that data with some instrumentation, some experiments, and increasingly now some external data.
Next, SmartStream and Bank of America look at the future of AI and blockchain in this digital world.
All that data, where do you see artificial intelligence and machine learning, where do you see that utilizing that data to be a lot more organized, a lot more effective? What's the scope there in RDU?
So for us, the proposition that we build and provide to our customers is very structured data. So it's not the unstructured data that actually everybody is running AI algorithms on. So what that means is when we actually sell to an organization, quite often they will be using it to help bring structure to the data sets that they have inside their organization. Now, that can happen in a number of different ways, but that structure generally is very helpful in making artificial intelligence algorithms more effective, because it allows you to bring data together in a much more consistent way across an organization, and then you don't get the same sort of garbage in, garbage out, which is an unfortunate tendency in some cases with AI. So for us, the AI isn't applied to the data we actually offer. It's actually the data we offer actually helps AI sort of make more sense, if you like.
What we want to do, especially across our receivable solutions, is be able to apply machine learning to get ourselves to predictive analytics. That's where it really starts to make sense for our clients, because that's where we can give them actionable information. Data is relevant all over the place, right? The bank has a lot of data, our clients have a lot of data, but we've got to turn it into meaningful information, and that's where machine learning can help to understand what's coming in and then be able to get that into some predictive analytics.
It's such an overused expression, but the whole data is the new oil, data is the new gold is thrown around left, right, and center. Mm-hmm. You guys at Bank of America have got a history of lots of customers and a huge amount of customers in total, so a vast pool of data. How does that feed into the machine learning robot, if you like?
Right, that's exactly the point, right? So Bank of America, we have lots of data, trying to turn it into meaningful information. But what we can get from the data that we have, and that's why machine learning is so critical from a financial institution's perspective. We have a lot of payment information, we understand what our client behavior is based on that, right? Their payments or their receivables coming in. And we also have information around our clients' customers and their payment behavior and everything. So you're right, and all of that data has to be taken in so that we can get to the point where we can do that predictive analytics, or we can give actionable things out of that. And that's one of the huge things with machine learning, is to get the algorithms and so forth right. The more data you feed in, the better off you're going to be and the more accurate that is. So that's why the banks, I think, have a real opportunity here from all of that information that we have, historical, but as we collect it as we go forward, making sure that we've got that and really provide value to the clients.
Is artificial intelligence becoming less of a buzzword and more of an actuality? What are some of the use cases you're working on with it?
Yeah, so it's definitely much more of a reality. We're still on the early stages of it, but one of the things, from a global transaction services business, we're becoming much more of a technology business to our clients, and that's what we've got to deliver, is technology for those value-added services. So things that I'm working on is intelligent receivables, and that is our solution for our clients' account reconciliation. So what we do is our clients really want to get paid electronically. They want their customers to pay them electronically. What happens though when that occurs, the payment information comes in through the banking system, but the client really doesn't know what that payment is for. So what happens when they go electronic, it splits the remittance information from the payment information. So what Intelligent Receivables does is uses artificial intelligence to be able to look at all of that remittance information, pick out the specific pieces that the client is critical to them, and then be able to straight through post that to their account reconciliation system. So all of that creates huge efficiencies, and what we get to with our clients is anywhere between an 85 and 90% straight through processing. So if you think about that, right, that means that 9 out of 10 payments that come in never get touched by a human. So it automatically comes in, posts to the client accounts, clears on their accounts reconciliation and their receivables system, and nobody even has to touch it.
At the moment in the lab, we use machine learning technologies, which basically look at data, learn from that data, and then they can predict data, or they can understand that data. Artificial intelligence is the next evolution, really, because artificial intelligence means that technology will be self-aware, so it's more a technology it's more a philosophical term than a technical term, because then technology will understand why it is doing something. So maybe we will see in 5 or 10 years the first real AI technology surfacing. There are some ideas how we can do that, but then that's going to be a very interesting point in the banking space, because basically what we do at the moment is we can emulate what users do, what the business does, what workflows does, but then we will see technology that will self-understand the workflows, and it can then run workflows without having a lot of data on that. In machine learning, you're so much dependent on data and on the quantity of data. And in the banking space, data is sensible. So with our partners, we always have to have very good contracts in place to get the data, work on that data. When we are really talking about the next evolution and AI, the technology will work on data without ever having seen data like we as humans do that. So that will be very interesting in the next 5, 10, 20 years if we have those algorithms coming up.
Outside of the realms of digital payments, I mean, RDU, for example, is just a huge amount of information. You must be on the machine learning side, things like kid in the playground with all the various SmartStream products. Let's just look a bit about RDU, for example. What's some of the opportunities that AI can take in that remit?
RDU is a huge space for machine learning and for blockchain, both. So if you look at RDU, it's a lot about data quality. And data quality can be increased a lot by automatic processes or by machine learning. So it's the next evolution that can be applied. We are looking at some use cases in the RDU environment, and it looks promising. We are much more advanced at the moment with our REX use cases. Specifically, exception management is a use case that has a lot of potential. If you look at the SmartStream product suite and where the most manpower is needed in our products, it's definitely in the exception management area. Working on exceptions that have been raised by other banks, classifying them, answering them automatically, or by exceptions that have been raised by our products, sent to the other bank, and then we get a response. And our product managers, they believe that 80% of the responses we get will be immediately closing the exceptions. So it means there's a potential of around 80% that can be automated. So that's a huge potential, and we are specifically working on that.
Is artificial intelligence becoming less of a buzzword and more of an actuality?
Yeah, so it's definitely much more of a reality. We're still on the early stages of it, but one of the things, from a global transaction services business, we're becoming much more of a technology business to our clients, and that's what we've got to deliver as technology for those value-added services. So things that I'm working on is intelligent receivables, and that is our solution for our clients' account reconciliation. So what we do is our clients really want to get paid electronically. They want their customers to pay them electronically. What happens though when that occurs, the payment information comes in through the banking system, but the client really doesn't know what that payment is for. So what happens when they go electronic, it splits the remittance information from the payment information. So what Intelligent Receivables does is uses artificial intelligence to be able to look at all of that remittance information, pick out the specific pieces that the client is critical to them, and then be able to straight through post that to their account reconciliation system. So all of that creates huge efficiencies, and what we get to with our clients is anywhere between an 85 and 90% straight through processing. So if you think about that, right, that means that 9 out of 10 payments that come in never get touched by a human. So it automatically comes in, posts to the client accounts, clears on their accounts reconciliation and their receivables system, and nobody even has to touch it.
So, for example, say an organization like Walmart, which has got hundreds of thousands of transactions going through every day, almost all of those wouldn't even be seen by a person, it'd be automatic.
A lot of that would be, that's right. That's right.
Just to look on the accuracy side of that, what would be the sort of things that a human would still have eyes on for reconciling various transactions?
Right, so if you think about it, with remittance information when it comes in, right, so like I said, the payment comes in, remittance information comes in a whole different way. So a lot of times when it goes electronic, payment comes in, remittance information, our clients, customers tell them, I'll send it to you in an email. They may bury it in an Excel spreadsheet in an email, or they may even say, just come to my portal or my website and you can get the remittance information. So what artificial intelligence does is really allows us to pick out the meaningful information of that and then be able to do the posting. So manually what's left is really just those exceptions where for some reason the remittance information doesn't match with the payment. And so it just can't automatically be posted to the account reconciliation. So somebody has to go in, look at that exception, figure out what's going on with it, may have to call up their customer and get more information. There may be deductions to it, to the payment, right? So they get billed $100, they only pay $90. So those are the kind of exceptions that have to be worked manually still by the client.
And would that be then on a feedback loop? So if it identifies, oh, this is what this type of transaction is, that can then be fed back in so future ones will be automated?
It is, and that starts to get into machine learning. So that's what happens with those exceptions. So in my example, right, that 10% that has to be manually worked, our machine learning as part of Intelligent Receivables does. Over the course of time, it will recognize those activities that are done manually and then be able to improve on that posting rate as it goes forward. So, because a lot of times our clients, their customers, do the same thing month in, year in, et cetera. So that same mistake continues to happen. Our system can learn that and correct that as it goes.
What are you doing in the realms of blockchain, and how is this going to be implemented?
So in 2017, we integrated Ripple as a payment gateway into cash and liquidity. And the next step is to use these smart contract features that you also have on different blockchains. So what we ran in the labs was a prototype on creating a blockchain that is SmartStream specific, where we can use and exchange data on the blockchain between products. And if you look at the SmartStream portfolio, there's a lot of need for exchanging data between products. In collateral management, it's about contracts that are negotiated between our customers. In corporate actions, there's a lot of need on blockchain technology. So now we have this technology in the lab, and now we are pushing it out to the products so they can use that blockchain technology to exchange data and negotiate like contracts in collateral management.
Excellent. And could this also be used to, again, improve operation efficiency, lower costs, etc.? Can this also be then used in some of the other products of SmartStream, say fee and expense, RDU, etc.?
Definitely, yeah. So if you look at the reasons why you use blockchain, it's always when you have different parties working together on the same data, but nobody should own the data, so it's decentralized data, and you want to optimize workflows. And we have seen that in the trade finance space, how they very efficiently could optimize the workflows in trade finance. And we have the same in so many other SmartStream products. So at the moment, we are exploring one after the other. But of course, we can just do so much. Yeah? So at the moment, we look at the most potential use cases, and then one after the other product will try to, establish also blockchain.
Finally, we ask all our interviewees about the importance of customer experience in this neobank world.
Machine learning really allows us to use all that data that we've been talking about, gather that, and get it to the point where we can give actionable information to our clients. So it really gets into looking at their customers' paying behavior and being able then for them to look at that. Maybe they can do better cash forecasting is one example. So that they understand what the client's going to be doing, when they're going to be doing it, how that impacts them from a financial perspective, in allowing them to do their day-to-day activities from a treasury perspective.
Solid, great customer experience is the one that built around the customer. Take something from the consumer finance, a mortgage. Fundamentally, the person doesn't think about a credit check. They don't think about the filing an application. They think about the end-to-end mortgage process to support the home buying experience. If a front office of that bank did not do something, if a back office of that bank did not do something, that's not a great experience. Even it may be, great experience in the front end. So same way in our bank, customer fundamentally wants net asset value of the fund. So we have the entire ecosystem to deliver that net asset value, not expose them to the process steps.
Just looking at this kind of sort of consumer mortgage type thing at the moment, how did it used to be, and what sort of elements have you directly changed?
So specifically to our bank, we're thinking of the processes end to end. And we're taking this process from customer's eyes, not from the bank's eyes. And from the customer's eyes, the process looks very differently. They have an input, they have an output, and in some ways, they want to ensure there is a security, there is a timeliness, and there is an accuracy to this process. That's our job. So our mission is to create this output for them while improving the input process in a way that they don't need to see it.
With that in mind, and just using, say, the consumer lending as an example, how are traditional banks, such as yourselves, able to keep pace with companies that don't have any of the legacy that are offering similar products? So how are you able to take advantage of, obviously, all the new technologies and all of the information that you currently have on your customers?
We're working on these 3 horizons. So we're digitizing the processes we have today, and that's where customers absolutely trust us. We're a reliable partner for them. We've been in business for 234 years. We have 30 trillion of assets under custody, and we are digitizing this very process. We're reimagining what we do for them, and we're creating the new process and services. So the startups, the fintechs, the digital first, they're just scratching the surface in the horizon number 3. What we're doing, we're working there, and we're embedding the best of them in our entire portfolio.
Thanks for watching this week's episode of the Fintech Show. Make sure to catch us next week for another episode and see all our previous ones on fintech.finance.